Hi, everybody. Good evening, ladies and gentlemen, and boys and girls. All right, good to have you all here. It is 8 o'clock Eastern Time. Good evening and welcome to another edition of DayTradeSPY.com's weekly fireside chat. Just gonna wait another minute or so, and people are just joining in here. So I see a lot of people still coming in here. So come on in, gang. Lots of room right up in the front. Excuse me. While we're waiting, a couple of things maybe I want to mention to you. First of all, yes, sometimes I do go a little bit too fast. I guess I just get excited, very passionate about what we talk about, and I do tend to go a little bit too fast. So, what we'll do is if you do find that that is the case, please just tell me to slow down, or if I'm talking about something you don't understand, don't worry about it right now, especially if you're new online. And if you're new, all right, use the questions box and just tell me you're new. And big shout out to you all. And if you are new and we get into some technical chatter, don't worry about it if you don't understand at this point. You're not going to miss a whole lot. And of course, if we're talking about something somewhat elementary, for those of you who are experienced, obviously, thank you for your indulgence with that. But anyway, we're going to just wait and see what happens. What's the other thing I want to tell you? I'm trying to think what it is here. Let me see. I'm sure I'll think of it. Yes, there is a questions box. That's the other thing. Speaking of this, let's go check in here with my good friend Aaron. Aaron Stevens, good evening. How you doing?
Doing very well. Thank you, sir. How are you?
Good. So in your travels now, where are you now? You're in Iowa?
Yes, correct. I'm on a golf course. Well, technically, not on exactly on the golf course, but I'm behind the first hole on a golf course in Iowa. That's where my dad's house is. Just coming to clean out some of his belongings. But yeah, having a good time here. It's very, very quiet. The only sounds I hear are the I guess it's rutting season or something because I hear a lot of deer out there making noises at night, and I also woke up to the sound of a cardinal trying to fly into the window, which I guess happens sometimes here, but um, it could be a sign. I don't know if you're kind of into those kinds of things. But this cardinal woke me up at about 7:30 this morning.
Let me ask you, have you been hanging around the 19th hole at all? Sorry.
Yeah,
Oh my
yeah.
gosh. I'm sorry. I'm sorry. All right. Let's get started. Good to have you here, Aaron. Good to have you.
Glad
We'll
to
be
be here.
we'll be chatting over there and yours truly. Let's just get the recording button here. All right. Good evening again. Listen, Sunday nights are supposed to be fun, relaxing, casual. And this is our introduction to trading, weekend review. My name is Hugh Long. Aaron. Oh, you know what? I this came actually off a PowerPoint that was that needs to be fixed here. Co-host. Let me see here. Da. Hang on a second, Aaron. Co-host is Aaron. Aaron Stevens. There you go. All right, just for the record, we got it all. All right, we're all good to go. All right, so today is April the 14th, right? Sunday, April the 14th. Yes, all day till midnight. So, hey, you guys have fun with the eclipse the other day? Was it Monday? Monday. It was fun. It was not we didn't have the crowds. I thought that they're predicting, oh, million people. Oh yeah, right. Please, come on. Maybe what they're doing around here in Niagara, they're saying that, oh, there's going to be a million people coming to Niagara Falls, and I think it chased everybody away, so we didn't have nearly that many. But anyway, for those of you who saw the eclipse, that was a lot of fun. But anyway, all right, and then of course the week went by, right? So once again, use the questions box for any questions or comments you might have. And I see a lot of people already checking in here. Doug is asking. He's a little bit late. He says he's asking for the dancing girls, another couple drinks. Yeah, I don't know if I'm gonna get the dancing girls later tonight or not. We'll take a look here. So anyway, okay, a lot of questions are already coming in here.
Hopefully nobody went blind. That's what I was going to say.
Yeah, I know what a lot of people are doing tonight. Working on their taxes, right? Taxes due tomorrow. Pushing to get them done. Took vacation Monday, still a few forms. Yeah, tax season is here. All right. Here's the standard disclaimer. I'll just let you read this so that I will be quiet, and I'm sure you're going to read this word for word very carefully. Make sure you totally understand that you alone are responsible for all your own trading, and past performance does not guarantee future results. All right, now that we got that out of the way, if you want me to stay on that longer, let me know, or if you want me to go back to it, let me know in the questions box. Because I know some people are very new to this. Okay, welcome to Christian S. He's new to this. Does your model take into account preconditions? Yes, it does. We'll get into the questions a little bit later on. So, all right, let's go into here. So there's me, and hanging out at the beach here tonight. Behind me is the background. Do you get a sunset out here now? I don't know. Should be sunset. A little bit about me, folks. My name is Hugh, and I learned most of my trading from the trenches. I learned a lot of theoretical stuff from obviously the many sources, resources out there. But it was actually the real hardcore stuff I learned from the when you get your hands dirty. That's where you really learn how to do this stuff. Because a lot of those courses, in fact, there's some stuff we teach I've never seen anywhere. No, no course out there teaches the stuff we teach, but we teach what we trade, and we trade what we teach. And I was thrust into this, I would say, the hard way when my own financial advisor blew out about half my account before I realized what was going on. That's when I took matters into my own hands and realized I have to learn how to do this myself, and that's exactly what I done. Been trading internationally, I guess you can call it professionally, since 2010. So we are in our 14th year. As a matter of fact, in about a month's time, I think it's May the 6th or something, will be 14 years officially that we've been training and trading and trading. I've been trading a lot longer, but officially trading. And even that was, as I mentioned, I was thrust into this by accident when I started. I learned a lot of stuff. I started trading equities and looked at other things like futures and forex and different things. But I kept coming back to this thing called options, and I felt very comfortable with options. And I eventually found just SPY options. SPY, that is the stock that follows the top 500 stocks in America, the S&P 500. Essentially, where the economy goes, that's where SPY goes. And so you don't have to do all those analyses and everything else. You don't have to stay up many hours all week long, all night, every night, excuse me, trying to assess where markets are going. I essentially get up around 8 o'clock every morning, and I get down in front of my computer. Within half hour, 45 minutes, I've got a pretty good idea as to where the market's going to go today. And then we go with that, and we tend to make some money for the most part. So after I started making some serious money in the market, people started to take notice and said, "Here, what are you doing?" Uh, and um, and after some a lot of vacations, new cars, new house, new airplane, all these things, they thought I won a lottery. I said, "No, no, no lottery, unless you want to call this newfound knowledge and experience a lottery." Yes, I would say yes, and it's kind of like an ongoing lottery. You see, with a lottery, you get a lump sum payment and you blow it, right? That's what most people do. They blow it and then they're back to their impoverished ways. And if you ever want to know, Aaron, I'm sure you've seen this, where you've probably Googled some of these famous lottery winners, or just Google whatever happened to some big lottery winners. You'll find in a very short order they actually go bankrupt. They go bankrupt.
Yeah.
They spend more. It's
Yeah.
unbelievable.
They don't know about the eighth wonder of the world, which is compound interest, and so
Compound
they
interest.
might they might put their they might cash out for the Powerball winnings, and then they put everything in their bank account, and then they go buy 10 Lamborghinis, and then six houses, and then they have friends and family that they haven't seen in 30 years come up, showing up at their door, trying to say hello. So at the end of that, there's not a lot of love left to give out.
So true, isn't it? You never know. All your long lost friends show up at the door. It isn't that the truth? As soon as they smell money, then all. I think that when you have money, there's a big bullseye on the roof of your house that everybody else sees, but you don't. And oh yeah, it's uncanny. It's uncanny, but
A different kind of bull market.
it's pretty funny. But yeah, and Google famous artists and sports figures that went bankrupt. Some of these people, I don't know, I'm not want to get into any of them in detail, but a lot of them have have amassed a fortune in their professional careers, and yet they can't seem to hold on to it. And anyway, they go bankrupt. So, excuse me, I just clear my throat here. Got a bottle of water next to me here. Anyway, I learned how to do this and learn. So I think there's two components here. Making money. A lot of people can make money, but not as many can actually keep it. And that's some of the things that we teach as well, how to keep it. So, well, that's my story, and I'm going to stick with it. Small short-term breakouts, small daily gains. That's how you build your wealth, right? And then when you have a lot of wealth, now you can do things with it. And ladies and gentlemen, here's my good friend Aaron. I'm going to let him speak, and I'm going to be quiet.
Oh, sure, of course. Yeah, just a quick introduction about me. Started learning about the stock market about 15 minutes away from here, actually, in my middle school library. Uh, I opened up the Wall Street Journal and started to look at the stock tickers, and it got very interested and didn't know about this whole new world called Wall Street. I thought Wall Street was an actual street that I know is, it is an actual street, but I thought it was, why are they talking about this street? What's so important about it? So I started learning about stocks and buying and selling stocks. I opened up my first account when I was 17. Started trading penny stocks. I got a little bit burnt in the Y2K. I think a few people did, as well as the tech bubble burst. So I stepped away and came back and started learning about Forex, and was very passionate about Forex. I tried several different systems, and um, and then I took all the indicators off, and I started actually looking at Fibonacci and Andrews pitchfork and trend lines and patterns and how they work with the markets, as well as cycles, which is something I'm getting back into, as well as Fibonacci time, another thing that I'm getting back into more in depth, and became very interested in it, and studied for and passed my Series 3 exam, which is a futures commodity broker exam. I worked for several different firms, most recently at a fund that had about 150 million under management. I was a analyst directly under the head trader, and it was a four-man team, but we were awarded a Pinnacle Award for best new, I think it was best new CTA, as well as a couple of other awards. But yeah, with all that being said, I'm glad to be here. I read a lot of foundational books on technical analysis. I'm really glad to be here and work with you, as well as all of our lovely subscribers and supporters. And I really love, I have a passion and really want to share as much as I can about how I trade the market and how I look at the market. And we have several people here, as well as others that are really catching on to some of the concepts that we teach in the trading room, and they're really loving it. And thank you all. So, all that being said, 14 years. That's almost as old as it's almost as old as my son. He's going to be 15 in September. So, you guys must have started right after my son was born.
I think so. Sounds like it. Must have, yeah, definitely. But I've been trading longer than that. I was just thinking here. Actually, it's funny. I was walking on the beach earlier today. I was just wondering, if I had to say one course that actually changed my life in this, I would have to say, and I didn't know at the time, obviously, but I think I was, what would I have been, 15, 16. It was a high school economics course. This concept of supply and demand. I gotta tell you, like I was not a genius in high school or anything like that. I was just like an average kind of a guy, you know. So it was but I really sort of took that supply and demand education to heart. I thought that's really kind of interesting. So really, and elasticity and when demand goes up, the price goes up and all these things and inventory, when inventory is constant, the price will change. If inventory can change, then the price can be constant. And I've always thought about that in so many ways in life, in everyday life. And right now we're just kind of chatting all over the place with things, but this is kind of interesting. So, like airline seats and hotel rooms, and I'll give you an example of what happened the other day here in the Niagara area, Niagara Falls, Canada, Niagara Falls, New York. people who were smart because of the eclipse. They wanted to come here because this is sort of the epicenter of where the eclipse was. So a year ago, they booked these hotel rooms, say for $150. And they were smart, and the hoteliers weren't that smart. They found out later, much later, and they did a real sleazy thing. They ended up canceling those reservations for the $150 and giving some lame excuse or something, or just because they could. And they left those people that booked well in advance, paying, committing to $150, and they rebooked the rooms for $1,000. They obviously want to take advantage of the situation. And that was a very sleazy thing to do, but it's just proof that when supply is really limited, then the price is going to shoot up. And that's really what this is all about too. When you buy and sell commodities and stocks and options and anything like that. And when demand kicks in, then people get excited and they start buying, and the act of them buying is what pushes prices higher. Anyway, it's all of that stuff, and I was really intrigued about all of that, and I always took that with me all my life, and I always thought, well, when should we book airline seats? When should we book hotel rooms? When should we book rental cars? When should we book all these things? And if you can get it on the off times, you'll certainly do a lot better. I think you know all that, but I can't think of a more pure forum than the stock market where that is actually seen and quite visible. So that's what I think. There's something else I want to tell you too. I know I got a comment here. Somebody's willing to sell me their very rare Ferrari to me for 38 million. Doug, thank you very much for that. But my beautiful Bernese Mountain Dog won't fit in that car along with my wife, so I'm gonna have to pass on your offer there. So, and there was something else I was going to talk to you about, Aaron. I'm sure it'll come to me, but I'll just let it go now.
Depends how much it's worth. If it's worth 50, maybe he'll take it.
Yeah.
He can make a profit.
Oh well. Anyway, let's move on. Let's move on. So all right. Anyway, that's our story. And so just an announcement, folks, if you have not yet subscribed, I'm sure many of you already have. We've got this newsletter that goes out every Thursday morning. It's called Spy on the Market. It's a quick read, about a 3-minute read. It's really like a fun, good read and kind of interesting. Just go to, all you have to do is subscribe, go to daytradespy.com, and over on the right side, I believe if you just click on one of those ebooks or whatever they provide over there, then that'll get you on the list, and you're going to get this thing. Last week's topic was what to look for in a broker. The week before we had what to look for in a mentor. So, and this coming week, I don't know what the topic is. I've got a few things I'm looking at, but I don't have a commitment on that yet. So anyway, check it out. Again, Spy on the Market. All right. It's a pretty cool newsletter. So, all right. Tonight's agenda, we're going to talk about the review of what happened last week. Just really quickly, we're going to go over that because it's not so much important what happened in the past as much as what's coming up in the future. So we're going to preview next week's. We're going to give you an update on the 2 to 10K challenge. Got a 2-minute tutorial. Then we're going to get into some Q&A. And I promise I'm not going to keep you here all night. So we're just going to make this. I'm not sure how long we should do, but Aaron, just so you know, I got to leave for just a few minutes at around midnight. If you want to take over at that point.
Okay, sure. Yeah, I think my pumpkin my chair is gonna turn back into a pumpkin. So
No problem. Just kidding about that. We should be done about another hour from now, I'm guessing here. So, all right, weekend review. Here's what happened on Monday. A low, no news day, mostly technical trading. We had mostly technical trading here on Monday, and jumped off a key support area around 518 and resistance between 518 520. Just kind of bounced around all day there on Monday, and that's what happens when there's no catalyst to actually move markets. Then what you see is basically range bound trading, a lot of range bound trading, and I can still make money. Don't get me wrong, but just got to be a little more careful. Volatility is usually a little bit lower. And so it's a little bit tougher sometimes to make some money like that unless you have some news. Tuesday was very similar, another low, no news day. There was nervousness that had set in for the next day's inflation numbers. That spooked SPY off of 520, came back down all the way down around just over 514. Not really sure. Aaron, I think you probably talked about a major drop there that if it actually picks up steam to the downside, it's going to continue. I don't quite remember the exact date, but the exact event, but it did catch some support, started pushing back up, and we ended up the day pretty well, kind of close to where we started, and then we stayed in that range bound into overnight trading. Now Wednesday, different story. We had CPI numbers. Um, Inflationary numbers. This is one of the key components that the Feds look at, all right, in determining what they're going to do with the interest rates. So CPI numbers came in higher than forecast. That's very inflation. In fact, it was quite a bit higher. And so if that's good for the economy, it's going to be bad for the stock market because the stock market was concerned that, oh boy, that's not good. The Feds are not going to be in any hurry to reduce interest rates. Therefore, the market just tanked on that one. We did get the bounce with the continued full FOMC meeting minutes released and Fed members' comments. And then on Thursday, excuse me, a negative sentiment that continued with the release of lower than expected unemployment claims, but kicked up a notch with the PPI numbers as expected. And we returned to test 519 on that PPI, producer price index. Friday, a little bit different. We had a rise in oil, which is a threat to inflation. Middle East threat of war with Iran looking to bomb Israel and with the U.S. Possibly getting into the foray on that. There's more chatter about the Feds holding off on lowering interest rates. That tank SPY, we got right down to 510 on that one, which was kind of a surprise to me and I think a lot of people, but that's what it is, and we're going to see what happens tomorrow. So sometimes there's some buying opportunities that kick in. From a seasonal chart, this is a seasonal chart for those unfamiliar with the seasonal chart. That blue line is where SPY is now, and the red line is a composite of the last 5 years closing price on the daily chart. Let's kind of zoom in on that one here like this. And if you look at it historically, SPY gained about 5 points over the last week, and seasonally, SPY dropped about 4 points the following week if we go from where we are now to where we are. So where we're going to be in a week's time. So we may be looking at a continued downturn for the next week. Not really sure because there are going to be some things that are going to be affecting the market. Some things are going to be probably pushing it to the upside. So just because this is what happened in prior years doesn't mean that it's going to happen again. Okay.
Hugh, can I ask you a quick question?
Sure.
Can you pass me the ball real quick and I can show some people what I see in markets? Is that okay with you?
Absolutely. Okay.
While we're on the chart subject.
Yep, you have control.
Okay, awesome. I just wanted to share real quick because there's a lot of people that are kind of spooked out about what's going on in the Middle East, and I kind of just wanted to give a brief understanding of what I'm seeing as far as the technicals go, and I'm doing this on the futures chart. So, for those of you that are not familiar with my work, I'm trained for 14 years plus in the Andrews Pitchfork as well as Fibonacci and other strategies. And I kind of wanted to show you some of the things that I'm seeing here. And I'll just make it pretty brief and not keep it towards the end. So what we're seeing is some pullback on the futures. Now price almost hit the upper median line, but it did not on the SPX. So I was continuing to stay bullish for quite some time, but we're starting to see a pullback right now. And these are the levels I'm looking at on the actually the E-mini S&P futures. So overnight, we're starting to see some support here at 5160. But if we do break down below that, that would bring it into about the 5100 level, which would bring us back to the highs on SPY of near the 23rd of February. So if we go over to what SPY is doing, and this is just some chart work here. But 23rd of February, if we break below those areas, 23rd of February, would bring us back down a little bit farther, maybe into the 507.30 or lower. And then if we have a continued break, that would bring us down to the 38.2% retracement, which would be around 502.50. So I'm looking at those two areas. I'm looking at where we're at right now, see if we have any type of bounce up. But if we break down, I'm looking for those highs there at the 509, and then a little bit lower at the 502.40 to 502.50 level. Just to give you kind of an understanding what could possibly going on in the market, where we're at. It depends really what happens tomorrow when they, how the market opens and how they digest what's going on in Israel. But definitely the oil prices, in my opinion, should be going up uh, over the next few days. This is a crude oil futures chart. Um, Currently opened up, uh, actually a little bit down, um, but we may be going up higher as well as gold. So just depends. Like this is from Friday. This is the close. And they opened. It's already up a little bit here. So there's some worry that's coming in, and some people that are taking positions to the upside on those two things. So back to you, Hugh. Just wanted to show my 2 cents while we're talking about charts here.
Sounds good. Okay, thanks so much, Aaron. Yeah, and don't worry if you didn't quite grasp Aaron's deep dive analysis there, folks. And but you're going to eventually learn that, all right? And when you combine that with what we have a saying. It says, "When our indicators unite, our oh, no, sorry, when our indicators unite, our trades ignite." So, just to give you a brief overview of how Aaron and I interrelate with this whole thing, we come to the same sort of place here from different places. Um, I have my set of indicators that work very well, and Aaron has his set of indicators that work very well as well. And sometimes they conflict, but that doesn't mean that one is right, the other is wrong. It just means that maybe the one is going to, prove itself a little bit later on, or the other one's going to be a little bit earlier on, or whatever. But when we both agree on a certain direction and market strength, let's say we're going to the upside Aaron says I think the market's going to go up, and I say I think the market's going to go up as well. You might want to buy call options, right? Call up, put down. Anyway, so we're going to see what happens. It's going to be an interesting week, I think, especially with this situation in Iran and Israel. So here's what happened last week. Markets digested market digestion fueled by hotter than expected inflation, rising concerns of an Iranian military strike in Israel. That moved markets lower and gold higher. Inflation may continue downward, but seems to have stalled a little bit, complicating the picture for the Feds to see what happens in the coming months. I know they've been talking about, well, maybe we're going to go with two cutbacks instead of three or four or whatever, and it'll be later. They want to see more proof. They want to see something more stable. They're really pushing to get the inflation down to that 2%, and they're really adamant about that. So I don't really see interest rates coming down anytime soon because of that. And especially if oil is going up, that's going to create inflation and everything across the board, right? Stocks retraced recently, but still remain only slightly, below the all-time highs. Still a favorable outlook for economic and corporate earnings, of which we are going to talk about in a little bit. So it's last week instead of a negative week for all three of these indices here, S&P 500, Nasdaq, Dow. They all came down a little bit last week, but year to date still pretty respectable. I mean, we're talking about 7.5%, 7.4% for the Nasdaq, so S&P, 7.8 for the Nasdaq. The Dow pulled down to like a 0.8% year to date, so I'm sure we'll see that one coming up. Let's take a look and see what's going on the week ahead. Coming up tomorrow, we have retail sales. The International Monetary Fund meeting starts tomorrow. And we got the Empire State, New York State Manufacturing Index. Some people call it Empire State. It's also called the New York State. On Tuesday, we got building permits, housing starts, and Fed Chair Powell speaks. On Tuesday, Fed Chair Powell speaks. Let me see. What's he going to be speaking on tomorrow? No, that's Tuesday. Tuesday we have where is it? Okay, I got it coming up here. He is going to be, let me just bear with me here, participating in a fireside chat. Not our fireside chat, I don't think, but maybe it's something I don't know about, Aaron.
I think they have a different flavor of barbecue at their fireside chat.
Maybe. So I'll have to check my invite to see if we're going to go to that one. I'm not sure. But he's going to be talking about economic trends in North America at the Wilson Center's Washington Forum in Washington, D.C. So um, maybe they got that idea from us, Fireside Chat. So I don't know. We're good buddies. We're good buddies.
Yeah, you, Mr. Powell. Yeah, you
Sure.
go way back, right?
We go way back, yeah. So every now and then he calls me and asks for my opinion, but I always have to say to him, listen, Jerome, I do the trading room every morning. I can't talk to you now. Please call me back after 11 o'clock.
The
So
better things to do, better fish to fry.
yeah, bigger fish. Yeah, there you go. Wednesday, we've got some hawkish members, Mester and Bowman speaking. Loretta Mester, I think Michelle Bowman. The women seem to be more hawkish than the men, I think. That's crazy, but they want to make sure that inflation is down. They have more patience for that than I guess the men. But anyway, Thursday unemployment claims, Philly Fed Manufacturing Index, existing home sales. Again, hawkish members Bowman and Bostic are going to be speaking, and more IMF meetings in Washington. Friday, IFM meetings. And guess what? Earnings all week, folks. We have earnings all week. And just to give you an idea, we're starting. So we had some banks report on Friday, and coming up here tomorrow, which is the 15th. We have some more banks, including Goldman Sachs, Charles Schwab, M&T, HDFC. Let me see. We have that's on Monday. On Tuesday, United Health, Johnson& Johnson, Bank of America, Morgan Stanley. These are some of the bigger names. PNC Financial, Bank of New York Mellon. So with these banks, they report their earnings. Kind of a bit of a bellwether as to which way the earnings are going to go. So I'm not really sure how it's going to shape up. Again, looking at seasonals being a downturn for the next week or so, could go either way. But we're going to wait and see what happens with these banks. Also, Tuesday you got United Airlines, Interactive Brokers. They're also going to be reporting Ericsson and JB Hunt. Some of these names here coming up on Wednesday the 17th. Abbott Laboratories, Travelers Company, Las Vegas Sands, Equifax. Alcoa is going to be reporting on Wednesday and on Thursday, the 18th. Big name there for Netflix. They are going to be reporting along with Intuitive Surgical, and a bunch of others. And on Friday, the 19th, what do we have? Procter and Gamble. American Express, Schlumberger or Schlumberger, however you want to pronounce that, Fifth Third Bank, and a bunch of others.
Do they
So
do they put extra cheese on the Schlumberger?
I don't know. I don't know. But I know it's not Mexican, so that's a good thing for you.
Yeah,
But
that would be important.
you're not a big Mexican, you know. Uh, I'm just curious how much gold is now at Costco. Costco, that's what they say. Thank you for shopping at Costco. Let me see. I'm just pulling up the price. You can buy gold at Costco now. Somebody brought that up to our attention the other day.
Yep,
That's kind of cool. I'm not sure.
$200 million a month worth of gold.
Is that what it is?
Yeah.
I saw silver, but their silver is way overpriced to what it is on the market. So I'm guessing probably so is gold. But I don't even know how I came up to that one, but I was just in my
They're giving their
URL.
middleman some extra cheese. That's what it is.
That's got to be it. Yeah, they got to cut they got to make their overhead on that one here. So, oh yeah. Anyway, week ahead. Here's what I think is going to happen. Volatility, folks, could be moderate on Monday, elevated on Tuesday, and moderate on Wednesday and Thursday, lower on Friday. Trick here is to trade small, trade often. Consider being in cash by Tuesday afternoon when Powell speaks, because Powell has a way of moving the markets, and when he speaks, markets respond, and it could go either way. Sometimes it goes both ways. So I'm probably going to be in cash on that. So one thing for sure, the stock market gives us many opportunities every day, and our job is to show you how to spot them, how to trade them. That's what we do. And we combine fundamentals with technicals, with the mental aspects of trading. We have many years between Aaron and myself. We have many, many years experience, over 40 years trading, market participation. Some good, some better, some not so good, some just downright, nasty. And this week was kind of nasty for me on the 10K challenge. But I don't mind telling you that we had some good, we had some good days here and we had some bad days. So a few days ago, April the 3rd, I think I talked about this already last week, closed out a position, took a loss of 1584, but then we're making some really good money here coming up. And I tried to really advance us back up. And Thursday we had a really nice gain of $749, which took us back up over 2651. And then Friday I got a little push in the envelope. We thought that not we I thought that things are going to go back up, recover nicely at some point. Jumped into the 516 calls for the same day expiration. Went in heavy, high risk, high reward. Trying to get ahead of the game, bought for $1.19. Then the market came down. And shortly after the trading room aired, I saw where this thing was going and it was not very pretty. I thought, you know what? I think it was like 1036 or 1038 or something soon after the trading room closed. I said, you know what? I'm just going to take the 58 cents and run away. I think it did go, the option did go up a little bit more than that, but not by much. Um, and sometimes folks, sometimes you're the dog, other times you're the hydrant. And this was a case of just going down. So got a little work ahead of us here and bringing this thing back up. Trying to balance safety with getting aggressive and making some serious money on the market. Not really sure I'm going to take it tomorrow, but we're going to wait and see. Probably go for safety tomorrow because there's going to be like a low no news day. So probably just try and go for some safety trades on that one. So, but that's kind of where that one sits. Took a high risk, high reward trade. Ended up cutting losses on that. So. And let me see. Thank you everybody for your suggestions on what we should do. Uh, Somebody even suggested that we should give a discount for the trading room. I said, not going to happen. If you don't see the value of the trading room, anyway, that's another story. But I think he was just joking anyway. That gentleman, by the way, makes a lot of money. Anyway, here's how the 10K challenge works. You start with $2,000. That's what we did. Trading only profits as they settle the next day. That's the thing. Okay, we don't have any funds allocated for repairs with that, so they have to kind of be right. All right, so we're only using a cash account, so the pattern day trade rules don't apply. Excuse me. Buying first, then selling calls and puts using our standard setups, tracking on the spreadsheet, and we report the results in the inner circle follow-up report, which goes out every day, all right, late afternoon, in the evening, something like that. We record our gains and losses net of commission. I'm considering $1 a contract as the commission. And our goal initially was to make $10,000 in 3 months, which we had done the first two rounds of the 2 to 10K challenge. We're going to extend it, but instead we're just going to wrap it up at the end of April and see where we are. I do expect to be at least in a positive situation with that. So we're going to wait and see what happens. But if we end up with $3,000 or 5,000 or 6 or 7, it is what it's going to be at the end of April. And of course, it's executed in our live daily trading room. It doesn't cost you any more to get involved in the challenge, although you might want to throw money at us for that, but don't please just join us in the trading room. That's where we execute these live before a live audience. Now, I just traded a little bit here. I'm not going to tell you how many contracts, Aaron, on Friday. And as you know, for health reasons, I'm not really supposed to be doing a lot of trading, but I checked to make sure that my doctor's not online, and he is not. Therefore, I'm going to present this to you. He doesn't come online. I thought he would, but I have to check every time before I present this slide because he's gonna yell at me because I have to promise him I'm not going to trade. But I just have some fun trades. These are fun trades, all right? So here's what I did on Friday. I got it at 9:34 and I got out at 9:46 in 12 minutes. I picked up 15 cents, $1.16 to $1.31. These were on calls, the 516 calls. Now, just to give you some perspective on this, folks, if this had only been 10 contracts, you'd have made $150 on an investment of $1,160, 12.9% in 12 minutes. 12.9. Where else do you get a little over 1% per minute? I can't think of anything. I can't think of anything. 1% per minute. Nope, I can't think of anything. So, other than the options market. So, for those of you who want to go a little heavier, say with 100 contracts, had this been 100 contracts, then you would have had a $1,500 gain in 12 minutes on an investment of $11,600. And congratulations to those people who traded this. Um, and um, and yeah, what I liked about it, the risk I thought was low, and it was actually a fun trade. Fun trade. So that's kind of the idea there. All right, I think it's time for our 2 minute tutorial. 2 minute tutorial. It's 8:41, so we've got about 2 minutes to do this tutorial. One of the questions that I see from time to time, actually quite a bit, is this. I have all your indicators on my charts plus a few more, yet I can never seem to make money like you do. What's wrong? Well, I think here is the operative word that they said, that operative words that are holding them back from making money, plus a few more. So what's happened is this, and I'm just obviously exaggerating here, but I have seen this sort of layout in the past. It's called analysis paralysis. And I'm reminded of this one gentleman I had many, many years ago. His name is Mike. He was in New Jersey. He took the course. I had a course. He took the course. He was doing very well. Great guy, funny guy. And he was a part-time actor and he flew helicopters, all kinds of stuff. But anyway, he liked to trade and he's doing quite well. And then he contacted me and said, Hugh, it's not working anymore. I said, what do you mean? It's working for me. What are you doing? And we got chatting about this. And at some point I asked him, I said, Mike, tell me everything you see on your charts, everything. And then he started telling me all the indicators that, we taught him, and then a bunch of other indicators. I said, whoa, hang on. What is that? What's that indicator? What Darvis box? I don't tell you to put Darvis box. Where'd you get that? Well, my friend so and so told me to put that one on. Well, what about that other one? ADX. What is that? Well, my other friend told me about that one. Well, what about this and VWAP or whatever? Where'd that come from? Well, my other friend told me. I said, oh, okay, here's your problem. I said, Mike, are you waiting for all these indicators to line up and then you're getting into the trade? He said, yep, that's exactly what I'm doing. I said, there you go. You answered your own question. By the time all of those indicators set up, that trend came to an end when it's no longer your friend. Did you find you're buying high and you're selling low? Oh yeah, it's exactly yeah. You get information overload. You're spending too much time trying to analyze. And look at this. Now, obviously, this is just something I threw up here. This is not what he sent me, but what happens when you have too many indicators on, you kind of lose where your prices are. You have no clue where your price are. You have all these other stupid indicators that don't mean anything. Most of them are just a reiteration of another indicator from before. Last check, I saw that Thinkorswim, which is one of the platforms that we use, had over 380 indicators to choose from, plus a whole lot more drawings. And who knows what else. So I told Mike, I said, dump all that crap in the East River, go back to the stuff that I taught you. Your well-meaning friends, as well-meaning as they are, you love them, but you know what? If you have to find a strategy that works for you and stay with it. And if you think that your friends, strategy is good, go with it. If you think mine is good, go with it. You were making money with mine, go with it. But you can't combine them. It doesn't work when you combine everything, right? So just look at the indicators. We use only a select few indicators, but our indicators work. So by keeping it simple as possible, right? And just tracking the indicators that work, then you're gonna set yourself up for, to be a winner. And that is
So would you consider the analysis paralysis to be a kind of sleep paralysis?
well, yeah, I think it's just, and I don't know what they're looking for. And honestly, I think that people would get into all those, they have no clue what they're even looking for.
Yeah.
It's not like the more the more the better. Oh crap! Our 2 minutes is up. Can we go a
Oh,
little later on that? I will go a little later on that. No, like in this business, more does not necessarily mean better.
hmm.
And in the same vein, if you like to trade and make money, you also have to know when to stop trading. So let's say you made some pretty good money between 9:30 and 10 o'clock and even 10:30. And let's say you walked away with your daily goal. Let's say your daily goal is $500 and you walked away with six, seven, $800. Well, you're all pumped up, right? What do you want to do? You want to keep trading. You feel like you're on a roll. You keep trading and trading and trading. You're in and out, in and out. And, by 1 or 2 o'clock, you might have ramped up your earnings to $2,000 and you keep trading. And then by 3 o'clock, Three, four by 4 o'clock, you're in a bad trade that if you were, and this happens all the time. Oh my gosh, I'm in a bad trade. The market's going to close. I expected the market to go up and now it's gone down. What do I do? Do I sell, take the loss, or do I hold overnight? And I remember this happened to me. I had 6 or 7 good trades. I used to do this all the time, all the time. I was so stupid. I couldn't believe how stupid I was. Aaron, you are talking to the most stupidest guy you ever met. I would
Well,
go in and out all day long, make a lot of money, but then at the end of the day, I end up giving most of it back. And I'll never forget the day when I calculated, okay, I'm going to give this back. I'm going to calculate how much I ended up with net. $1.46 net to the good side. I said, so wait a second. I was in the market all day and I didn't even get a cheese sandwich out of it, not even a cup of coffee. So I decided that I'm going to stop trading, stop initiating new trades at 12 noon. If I can't make my money by 12 noon, I shouldn't even be in the market at all. I have no right to be in the market in the afternoon because I don't have to tell you, if you're in a bad trade, say at 2 o'clock in the afternoon, you know how fast that 4 o'clock bell comes up. It's the fastest. And now you're stuck. You don't want to be in that position. So keep it as simple as possible. Don't overtrade. You know, when you made your daily goal, get out, go enjoy the rest of the day and have fun and enjoy your profits. So, and that's what that is. So anyway, we have tools that work. We have tools that work. Okay, let's go back. There we go. Oh, there we go. Okay, there you go. Aaron, what do you say we get us a few questions right now? Any questions that might
sure. We will go on a quest with the questions.
go on a quest with the questions? Uh,
Let's see here. I don't know if you saw that one. Are you selling Powerball tickets tonight?
what kind of tickets?
Powerball tickets.
Powerball
Not sure.
tickets?
Not
Yeah,
sure.
okay. Powerball. Yeah, yeah, yeah. Yeah, Doug, he's the same guy that wants to sell me his Ferrari for
Yeah.
$38. Uh,
Um,
not if it doesn't fit my dog.
Let me
Oh,
see here. War anybody?
uh,
What do you think? Possibly, maybe you can mention what a little bit more in depth, what you think could possibly happen in the markets. I mean, you've had more experience during, I don't know, you should call them excursions or missions or wars or different things, than I have just because you're older. What has been your experience during those times? Usually, for defense stocks, to me, the defense stocks usually go up and the staple foods, staple goods usually go up. Oil obviously goes up.
yeah.
What do you think is going to happen possibly within the next few weeks if this escalates?
So here's what I discovered. I can't remember which war or whatever, but I was really, yeah, that's a good question. That's actually a really good question. I couldn't believe it. The market doesn't, from a humanitarian perspective, the market doesn't give a rat's behind about that. They don't care if 1 million people get blown up. You know what all the market cares about is interest rates and that kind of stuff. And I'm thinking, look at this. All these really bad things are going on. The market's not responding. All they care about is, oh, that's good for the economy. And where's the interest rates? Where are the interest rates going? If interest rates are going up, then let's just pull back. That's going to be bad for the stock market. If interest rates are going down, then they like it, and then the market goes up. And I found that to be always the underlying thing. So if oil is going to go up, which it looks like it's going to go up if there's a battle in the Middle East, that's going to be inflationary. And then for that reason, I could see the market going down. Not because they're fearful of some war or people getting killed and everything else over there. It's going to go down because of the threat of inflation. And it always comes down to that. So I think that's the thing we have to keep an eye on is oil prices and see where that takes us. So um, that's kind of my experience with it. So
Yeah. Yeah, I was looking at some comments and reading some things, people are talking about possibly getting some, you know, y- frozen dried food, stocking up on
oh
ammunition, buying some potassium iodide, things like that. So I was wondering, if you think that this could be the big one, or if you think that this is going to be, just
oh no, it's not the
back
big
and
one.
forth.
No,
Okay.
no, it's not the big one. no, no, no. We're a long way from the big one. I'll tell you what I'd be afraid of, AI. All right. I'm afraid of AI.
Yeah.
AI doing something, something like that. If there are humans involved, I think cooler heads will ultimately prevail and stop it. And there'll be economic sanctions before, oh yeah, they'll lob some bombs back and forth. Well, didn't Iran send over a bunch of drones or something, and then Israel and the U.S. shot them out of the sky or something, and no
Yeah.
problem. And I think that was the end of it or something. So I don't see that really escalating. But I don't know. I mean, if Iran gets involved, if Russia and China, oh my gosh, then we
Yeah.
could be in it for some heavy duty damage. But I don't know. Nobody wants a war. Nobody wants it. Nobody wins in that. Trouble is you get some crazies back in there, and people like Putin and stuff, and no telling what comes of that. So,
Yep.
but anyway,
What software am I using? I'm not using a software. I've used several different softwares before in the past, charting softwares. I'm actually using TradingView. It's one of the most popular charting packages, but it's actually totally through your browser. It's totally cloud-based. You just open up your browser, plug in TradingView. It's completely on the cloud. You can draw everything. They use a different type of, I don't know what it is, uh, Java or something to program, and that's how you use it. Did you want to go over anything that people might be in, like any particular trades, or do you want to save
no,
that for the trading room?
no. Okay, so we should talk about that. So what's been happening here, and I know this sounds really bad, but we get tons, 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 tons of. We have a lot. We have thousands of people subscribing. So you can imagine how many emails Aaron and I get, and customer service. And then if customer service can't answer, they flip off to us. And we've been spending all day, all night, all the time answering emails. And some of these emails get very lengthy and we can't get to them all. And as much as we want to, what we're going to be talking about is condensing a lot of these questions. So we have venues in which you can ask these questions. All right. So we have the free session every Sunday night at 8 o'clock. And then we have our inner circle, which I'll tell you about in a little bit here. So that's every Tuesday night at 8 o'clock. And then, of course, our trading room, which is every day, 9:20 to 10:30. And these provide opportunities for you to ask any questions. And we'll certainly try and get to as many as we can. And I'm thinking here some of the more popular questions. I got a bunch here that I'm going to answer too because I got a bunch of emails that came in and so at some point you have to get some sleep. But anyway, Aaron, I don't know if you've been finding that too, but it's been overwhelming. So,
Yeah, I tend if ever I have a few things going on at the same time. So if you ever see that I haven't responded to email, just shoot me a real quick bump or say, hey, um, I sent you an email a few days ago because we do have a lot of subscribers, we do have a lot of services, and we do a lot of things in the background as well. I know Hugh does have, because he's the big shot. He has a lot more emails than I do, but I get my share of emails and other things from time to time that I have to take care of. So, um, but yeah. So as far as particular trades, try to address that in the trading room. If you're in a trade, we'll probably be going over that in the trading room. And you can ask as much in detail as you want about any particular trade that you're in. Um, some people are saying that there's two comments. From Bill, the Iranian mission to the UN has said that the situation with Israel is concluded. That should relieve some of the pressure on oil prices. I think Israel is going to respond in kind, basically, from what I'm hearing on CNN and other places. So I think that Israel is going to retaliate against Iran in some capacity over the next few days. That's kind of what I was trying to find out and pick Hugh's brain a little bit. Um, to get his fingers switching. But and then the next comment following up, Bob, the math guy, it doesn't look like the big one to me unless you live in Israel and Iran, then maybe. So this is going to greatly, in my opinion, okay, this is going to greatly affect the markets over the next few days. And I don't know what that's going to look like. I don't know if it's going to be a trend fall, trend continuation retracement, or if that's going to be more chop and more volatility. if it's going to be more volatility, usually that's pretty good for day traders because that means that we can take advantage of those opportunities. Um, if you see a slow caterpillar to the upside or the downside, that's usually good for um, long-term investors. But if it's back and forth kind of volatility and kind of in one direction overall, that's actually good for day traders. So we'll see what happens.
Okay. I want to take another couple of questions. I'm going to just find a sample of the pick of the day that somebody's been asking about, and I just want to kind of give them that and discuss that as one of the there it is right there. Uh, okay, here we go. All right, let's go. Okay, so there's a question about the pick of the day. Okay, here's a sample. All right, this is a sample. When you subscribe to the pick of the day, you get this email every day. And this is it right here. Today's pick is, and then it's in yellow. It is not this colored one here. I can't believe somebody actually asked this. This is an example of the code. It's just an example. It's not the code. The actual pick is this one here in yellow with the black background. And this is just an ad up here. We do not have the live interactive class at 1 o'clock. That's not us. That's the Trusted Trading Institute, somebody else's. Okay. But here's how you read and this tells you how to read it. So the rules say, all right, you're gonna get the pick before 9:30, somewhere around 9:10, 9:15, something like that. You're gonna get the pick. It's a very particular pick. All right, so the first thing you want to do, especially if there's a big gap, you want to wait until the bid-ask spread settle in nice and tight. All right, you don't want to just jump right in. And don't use market orders, use limit orders. Always know what the most is you're going to pay for something and the least you're going to get for it when you go to sell it. So the idea here is to buy within the first couple of minutes. If it's going your direction, so look at the 1 minute chart. Let's say it's a call option, and on the 1 minute chart, you see the pressure to the upside. Buy then. You're going to buy the ask price then. Or if you really want to get it, if the price is moving up, then go 1 or 2 cents higher than the ask price, get it. Then immediately put up for sale for 6% profit, and then let it go. If it's going against you on a 1 minute chart, wait until the 1 minute chart turns around and back in your direction, then buy it, and you're going to get it for a cheaper price. I always like to use good till canceled orders, and like I said, limit orders. And it's as simple as that. Don't read into it any more than that. That's really all it is, and that's all. That's really essentially what it is. So, because I know there's quite 1 or 2 questions on that. By the way, Aaron, I think the links for this week are going out soon, if not already.
Yeah, that they went out. I was a little bit behind. I got in super late last night in Minneapolis, and I drove all the way to my dad's house. It's about a 2-hour drive. So I don't know if it's Iran or Iraq or who, but Russia. But a lot of the car rental agencies had computer systems down at the airport. So I don't know if they were just sucking up all the juice to try to do a cyber attack or quieted everything. Like if there was, because our our uh, our guys, we have a lot of special tricks up our weapons. So if they want to quiet something, they take off all the bandwidth and they use every single thing that they can, all the bandwidth possible, extra bandwidth possible to listen in or do a certain type of attack or certain types of things. So I can't really talk too much about that, but
Yeah.
um, yeah. So my car company gave me my car rental late, so I got in late. So I sent the links out just while we were starting here. So you should have all the links. Well, there's only one link that you have to register for. So you just register once. You'll use the same link. Every day you'll get an email reminder to join our webinar.
Good. All right, let's go. Let's go forward to 9 o'clock here. We've got some solid goal, learn and earn actionable plans that we do, and let's just kind of go over these, folks. The first thing is if you're just starting out and you don't know where to go, really the inner circle, less than $1,000 a year, 275, you're going to get morning market analysis. This is where we actually um, we you know we analyze what's going on. All right, and it's like a flash assessment of the way the day's going to unfold. And this is sent out shortly after 9 o'clock. And there is a follow-up report that is sent later in the day as well as to what we actually did in the trading room. And these are very brief synopsis. There's nothing that's going to take you longer than a couple minutes to read. Okay. And also in the inner circle, we have our Tuesday night interactive meetups. These are recorded in case you do miss them. And if you do miss them, you know you're going to miss them. Maybe time zone or whatever. You can always email your questions in, and then we'll get to the questions on the Tuesday night interactive meetups. This is something we started actually, but this is one of the things that we started 14 years ago, and it's been very much discounted now since Eagle Financial Publications took us over. But here's what it costs you: $9.95 a year, only $2.75 a quarter. A heck of a deal. And you know what, Aaron? I wish I had these services when I was learning this stuff because I would have saved myself so much time, aggravation, money, you name it. I wish I'd have really had this at that time. But you guys are lucky that you do have us. You're learning from our mistakes, so you don't make them, yourself. You're learning from our experience, and I mean that's just the way it is. So the inner circle is still going strong, stronger than ever after 14 years. Day trade spy signal. If you really like to trade a lot, it's kind of a nice, easy algorithm based. You get 3 to 5 signals a week. This is sent to your cell phone and an email. As soon as you get it, buy right away. Within 2 minutes, immediately put up for sale for 5% gain. If it does not sell by the end of the day, sell it at market close. This priced at $14.95 a year, $3.99 a quarter. Okay, it's been working very well. I don't have the stats as to the success. I believe it's around 93% successful right now. And just the way it's designed, those trades are not options that expire the same day. There's plenty of time, so you're still going to have some premium in those trades after they expire. Like not to expire. If they don't sell the same day, right by 4 o'clock, you should still have some premium in them. And I'm just trying to get this thing going here. That's okay. That's the signal. All right. Now the pick of the day, similar to the signal, but instead of getting the signal on your cell phone at the time when it triggers, you're going to get it earlier in the morning as to what we see uh, as going to be a particular trade that you're going to buy right at the market open. So the signal is triggered with an algorithm. The pick is actually anchored in time. In other words, we say we believe that the market is going to go down sometime during the day, enough to give you a 6% if you buy it at the beginning of the day. So you buy it at the beginning of the day, put it up for sale for 6% gain, walk away and come back later, and the money should be in your account. Now, sometimes you may have to hold overnight. Sometimes you may have to repair them, but we don't have a repair calculated in this thing. And this too has a 93% success rate currently. I think maybe even a little more. I'm not really sure. Every morning, Aaron and I get together and we look at the markets, we look at the fundamentals, we look at the technicals, look at everything. Twitter feeds, everything we look at, and we make a determination. Is it going to go up or down today? Or maybe no trade. If the volatility is such that it's near impossible to make money on a day like this, we might just say, the trade is a no trade. And don't get mad because there's not a trade. Some people say, Aaron, it's so funny. Some people say they call you up and say, "Well, I paid for the pick, so I didn't get one." I said, "No, you got a no pick." So we're actually saving you. You're saving your butt by telling you don't trade today because it's going to be too crazy to get into a trade first thing in the morning. If the volatility is sitting at 80% or something like that, that means the options are going to be very expensive. And if we tell you to get into, say, a call trade and the volatility is 80%, and those options are, $7, and then in 10 minutes, the volatility gets sucked out of it. Now those options that you just paid $7, $8 for, whatever, they're now worth $3. Well, sorry, but you just lost what, $3, $4 or whatever, and in the volatility squeeze. So sometimes a no trade is better. It's better to not be in a trade wishing you were than to be in a trade wishing you weren't. right? So we like to use a 6% good till canceled gain on this one. And again, it might be held overnight. I know that also too that some of these can be repaired, right? So if you're in a bad spot, for example, let's say some people bought some calls on Friday. I think there might be some. I think the pick was actually still open because I can't remember if I recall. That's not so bad because if Monday, tomorrow, the market's really on the low side and yet we see it coming back into our favor. This happened the other day, and I suggested, okay, here's how you would do a repair in the trading room, and we showed the repair. And those people that executed the repair, they ended up doing very, very well on that trade. So you can always repair them. And there's also ample time in these picks so that it's not something that's going to expire right away today that you have to either make money today or toast. Also, with these programs, you get a pretty cool money back guarantee, folks, if you really don't like it. So it's not like we hold you ransom or anything. But here's our piece de resistance. Is that how you say it? Piece de res I can't, my French is no good. You know, the thing. This is the essence of what we do, the trading room. The trading room. Every morning, Aaron and I get into the trading room, we open it up, 9 o'clock, you hear music that says that, you know what, it's alive, your audio is alive. That's why we play music, to make sure your audio is alive. And we get in and we talk, we talk about what's going to move the markets that day. And we go over the news, all the news events, everything that's going to fuel the markets. And these are interactive sessions, so you can interact with us, learn and earn, fully narrated, and our strategies come alive in the trading room every morning, 9:20 to 10:30 Eastern. 6.99 a quarter. 6.99 a quarter. Again, a money back guarantee with this one too. So if you already know what calls and puts are, this is where you need to be. You don't have to be an expert trader to be in here. This is where we actually make you into an expert trader. And then, of course, we have this program. I've got some people asking, well, do you have any training on this? Yes, the Ultimate Training Workshop. Aaron and I put this program together a few months ago. You get 11 recorded webinars, each about an hour and a half in length. Unlimited access for at least 6 months, although we've yet to drop anybody. You're going to learn everything we do. Everything we do, all right? Everything. And, we teach what we trade. We trade what we teach. You're going to learn options fundamentals, money management, technicals, strategies. You're going to get into Aaron's deep dive analysis. The stuff is solid gold, folks. You're going to acquire how to repair skills, techniques. You're going to gain confidence. And this is a very special price, $9.95. $9.95. It was not supposed to be $9.95 for very long, 2 weeks tops. But our IT guys have still not yet changed it. I'm not going to tell them. But once they discover it, they're going to probably put it back to the regular $3,500 price or $3,000, whatever they're going to do it. So what I'm going to suggest here is, folks, go into the website and grab it now. Grab it now because this could change any moment, and it'll be back high. So you want to learn what we do? This is the place to learn. All right. So, and of course, we have some online workshops. Go to the website. The website is daytradespy.com. And I am going to show you where that is, and we can actually see um, the various um, online training programs that we have. Just click on up at the top right where it says online workshops. And we got power scalping workshop. We just did it, a couple months ago or so. Repairing bad trades, an excellent program. You got to get into that. And Aaron's got his deep dive analysis workshops in here. And this stuff's solid gold, folks. Solid gold. You learn all this stuff. And yes, in answer to somebody's question, yes, you can make a very good living doing this. A very good.
Question here, are we able to mention what's coming up in May or no?
Yeah.
No?
Oh, yeah, yeah. Please, please. Oh, yeah. You'll love this one, guys. Now, this has not been officially released yet, but this is the unofficial. Unofficially, we'll talk about. Yeah.
Okay,
Go
I don't
ahead.
know if
You're
we're
hosting
able to
this one.
mention it. Yeah, I don't know if we're able to mention or not, but we're planning on having a Fibonacci workshop coming up in May. So it's going to we're just in the planning phases and putting together some information about it right now. This is kind of like a sneak peek, if you will. So it's going to be very, very interesting, as well as informative, as well as will help you to understand the ways that I look at the market, as well as the tools and techniques that are involved in Fibonacci trading. And if you have any comments or want to see me talk about anything in particular, please let us know in your question and answers box, or shoot me an email. But we're currently in kind of the the, the probing and development phase of that, and it's going to be really exciting. It's going to be really powerful, and I really think it's going to help, especially for those of you that are familiar with it, or looking to make extra money in the trading room. I'm not sure if we're going to take any live trades while we're using it, but we may. But it's mostly the scalping webinar that we did was very good, and it was more interactive in that regard. But this is going to kind of help you set yourself up as a foundational course on how I look at the markets in regards to Fibonacci. So it's going to be great.
So save the date. It's going to be May the 15th, Wednesday, May the 15th at I believe 11:30 a.m. Eastern time.
Yeah.
11:30 Eastern time. Aaron's going to be hosting this. I'm sure I'll be there as well, in the background and doing whatever, helping Aaron along with it. But this stuff this is incredible stuff. This is incredible. So, is there a prerequisite that you need to know on this, Aaron, or is this like for beginners, intermediate, advanced? Where would you categorize
Um,
people in on this one?
sure, of course. I think it's going to help every trader because we're going to touch on everything. So we're going to touch, this is the first one I think that we've done where we only focus on Fibonacci. So it's going to touch a little bit about the basics of chart work, the basics of support resistance. It's going to talk about the ratios that I use, as well as some that other people use, and as well as how to put everything together, along with volume. Volume is really, if any of you are in the trading room, you understand how volume works. Volumes is really a good component of watching where there's buyers and sellers at. It can give you an understanding of what the dealer is holding in his cards, especially if there's heavy volumes at a psychological level. We're going to talk about that. We're going to talk about the history of Fibonacci. It actually goes all the way back to the pyramids, as well as other things that. But Leonardo da Pisa was just somebody that made it a little bit more popular in the markets. Sorry, in economics. So.
And you're not fibbing on that Fibonacci.
Yeah, of course. My nose is not growing, as my daughter likes to say.
You're not Fibonacciing on that. Okay, sounds good. Yeah, let's get to some of these questions. These are questions that have come in, and rather than individually, answering them in emails, and again, after about 100 of these a day, you just get, "Oh, okay, we're going to bring this up on Sunday night." I usually manage to get price too high and get the price too high, then spend the rest of the day watching it race to the bottom on prices. What success could I get by using candles? It's all dumb luck so far. Also, wait to average down my cost by never buying more shares before noon. Okay, so I'm not really sure where this person is coming from. This is something, first of all, I'm going to recommend here, learn how to read candlesticks. You should be in our trading room. We will teach you candlesticks trading. Okay, these Sunday night sessions are not training sessions. These are sessions where we're going to direct you where to go for this. Candlesticks are easy to read, and they tell you a lot about the price because it's actually happening. The price is telling you what it's doing right at the moment. Because all those other indicators that I showed you in that analysis paralysis, those are all history. They're all lagging indicators. They're all showing you what's happened. We know what happened. We all see what happened. What we're trying to do is anticipate where the market is going to go. That's what we're trying to do. And then we're taking a page out of the great one, Wayne Gretzky. For those of you who don't know, he's like the greatest hockey player of all time, and like by far, by far. A reporter once asked him, "Mr. Gretzky, what is your secret? I mean, there's got to be something." He says, "No secret. I skate to where the puck is going, not where it is." How profound! And that's what we do. And that's where you'll find us a lot of times if the market is coming down, 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 and we say it's going to go up, and people look at us like we have two heads. No, we're looking to see where's the market going to go, because what we do is we put our technical analysis together, we put our fundamental analysis, we put all that stuff together, the psychological stuff, we put all that stuff together. And if we determine the market's going to continue to go down or go up, we'll tell you where it's going to go, where it's going to go. And I think of all the indicators and all the various programs out there, Aaron, honestly, I think you and I, we have the best.
Mm.
I'm not just saying this, but I've yet to see anything that comes close to what we do when it comes to this. And yes, there are going to be days where you're going to be in a down situation, and there are going to be losses. You know, we all have losses. If anybody ever tells you they never lose, they're lying to you. Everybody is lose. You know, I'm struggling right now with the 10K, but you know, but personally, I do very well. I get in, I trade a lot of contracts. Okay, I'm not going to kid you. I don't want to tell you anybody because I didn't tell you because I don't want to put anybody on the spot with that. But you know, I do very well. And when we teach you this stuff, so in answer to the question, yeah, get into the trading room, learn the candlesticks. You don't, what you want to do is you want to take the dumb luck out of it and put it into skill. Think of it like two buckets. The dumb luck bucket is full and the skill bucket is empty. So what you want to do is you want to take all this stuff from the dumb luck and put it into the skill. So when you're trading, you're not trading on luck. We're not luck traders. We don't want to be on the luck side of things. We want to be on the skill side of things. And this thing about averaging down by never buying more shares before noon, I don't know where that came from. That's news to me. I like to buy my trades before noon. I don't like to buy anything new after noon because of what I mentioned earlier about getting in a bad trade and that 4 o'clock bell comes around and I end up making $1.46 one day. I thought that's enough of that. What a waste of time and effort and stress and emotion and everything else. And by the way, you're at 4 o'clock. If you've been trading all day, you're an emotional wreck, right? You got fear, you got greed, you got ego playing, you got FOMO, you got YOLO, you only live once, fear of missing out. You got all those emotions playing at you, and then you by 4 o'clock, you're just wiped. That's that first question. Next question here. Here's a question here. What do you do after you filled your buy to open? And this person bought at 345. So I immediately trade sell to close, 366, yes. I returned to the trade options and the ask price was 361 at 840. I think he's talking about Central Time and declined thereafter. So I'm not really sure what he is referring to, how he was declined. Um, could be declined for a number of reasons, which I'll get into. When I'm selling, should I be selecting a bid price instead of the ask? Okay, so let me just fix this one typo here. It's not a typo. I just want to get this for consistency. Okay, so a couple things in this question here, and I believe this gentleman is uh, quite a senior citizen, so I really want him to understand this. Okay, so first of all, you're going to buy to open and immediately put up a sale for sell to close. Now, what's important here is this. With options, you actually have four choices: buy to open, sell to open, and then there is sell to close and buy to close. So always with the way we trade, always buy to open and then sell to close. If you sell to open, you could be getting yourself in a really precarious position, right? And especially if you don't have the asset to back it up. You could end up owing your broker an awful lot of money if things go south on you. So always buy to open and then sell to close. So this person was right on with that, and his numbers are right too. If he bought for 345, 6% gain will take him to 366. So he's spot on with that one. So then this thing here, what he's saying is, I returned to trade options and the ask price is 361. So this must be Central Time he's talking about. He's declined thereafter. I'm not sure what the decline is. So if he is trying to buy an option, maybe doesn't have enough money for it. Maybe his, so there could be a number of reasons why he has declined. I can't answer that question. I'd have to know more information. So if anybody's ever going to be emailing us for these questions, give us as much information as you can so we can intelligently, answer them. I don't know why he would be declined. Um, if he's maybe he doesn't have enough money in his account. That's the only thing I can think of. And then this other one here, yes. So when you buy something, you're going to buy at the ask price, and when you sell something, you're going to sell at the bid price. Or let's put it that way. Those are the prices you should get filled on. Now, in reality, if you buy something and you go to the ask price, if you really want it bad and it's going, let's say it's going up, right? And let's say the ask price is $3 and the bid price is $2.98. And then you look at it, you put your price in for $3 and it doesn't get filled because now the ask price is 302 and the bid is $3. So you come back and I have to pay 302 for it. So you put it in for 302 and it doesn't get filled because now the ask price is 304. You say, oh, it's 304. So you keep chasing it up. And you keep chasing it up until you get filled. But when will you be getting filled? When it's coming back down again. And that's what happened to somebody the previous question. He gets filled at the high. That's probably what he's doing. He's chasing it up, and then when it reverses, comes back down, then he gets filled. And then, of course, the stock keeps going down, down, down. So here's a little tip. If it's going up and you want it and you want to buy it, let's say the ask price is $3, then why don't you put your bid in for 302 or 303 as a limit order? That means that if the stock goes up by the time your order gets there and it hits 302 or 303, you're at the front of the line, you're going to get filled. Now you're going to get filled at that 302 or 303 or $3 or maybe even 296 or 298, whatever the market price is. So you'll get filled at the better price of your limit order or the market price, whatever that's going to be. But yes, you would buy at the ask, and then of course the converse is true when you sell it, you're going to sell for the bid. Now, oftentimes, if you're just kind of sitting around and say, yeah, I want it, but I don't want it that bad. So let's say you put in an order to buy it somewhere between the bid and the ask, you'll probably get filled for that too. So I hope that kind of makes sense. I hope I didn't confuse everybody with that. But yes, if you are selling, you're going to be selling it for the bid price. So, beat that one to death. Here's another question. These are all emails we got. I want to learn the principles of trading. Do you have any methods available that I can pursue to study on my own time? Absolutely. That is the ultimate trading course. You'll find that on our website, and it's still there for $9.95. You better grab it. That is an awesome, awesome deal. Knowing what I know, I would pay 10 times the money for that one easily. All right, another question here is, I understand the advice. It's important to place the order as quickly as possible before the opening. Since we don't see the premium because there's a 15-minute delay on the trading platforms, I'm placing the order quite blindly, which is quite a struggle each time. Do you have any recommendations on how to handle this point? I don't know where this question came from, folks. But it's okay. So it's important to place the order as quickly as possible before the options market opens at 9:30, not a minute before, not a second before. 9:30 after the opening bell, that's when the options. So what you want to do is you want to place assuming it's the pick of the day, you want to get in there as soon as possible within the first couple of minutes if it's going your direction. Again, if it's going against you, wait till it turns around, then go back in, right? So you have to wait until after the market opens. Use a limit order, buy at the ask price or a little bit higher, and if you want to get in, if it's going in your direction, you'll get it. Immediately put up for sale for your profit target. Get to a cancel order, walk away, come back later, the money's in your account. And it says, since we don't see the premium because there's this 15-minute delay he's talking about, I'm thinking here, this person might be talking about that 15 or 20-minute delay on the platforms. So if you're using Thinkorswim, I think it's a 20-minute delay on the SIM account. That is if your account is not funded. If your account is funded, you should get real-time data on your SIM account, just like you do on your real account. There's no 15-minute delay. There should be no, if your trading platform is delaying your data by 15 minutes, get away from that trading platform. That's as useless. It's as useless as okay, I don't want to say it, but it's of absolutely no use to you to have delayed data. I don't even know why they do it. So you're probably not with a good broker. I know some banks might have that issue. So that's not what you want to do. You want real-time data, real time, right now, not a second delay. So, and placing orders blindly. I don't know why you would place orders blindly. That is just foolish. You want to make sure you know what you're buying, how much you're paying for it. how much it's going to cost you. You wouldn't give anybody a blank check. Why would you give the stock market a blank check? So that's kind of my that's how to handle that one. So, all right, next question here. When you say you consider a loss is around 65%, how's it calculated? Yes, it would be the 1 minus 0.65. So what do and that's just an estimate. So essentially when I'm down about half, so when I'm looking at my options in real, okay, when I'm down about a half, and this is not set in stone. Oh, 65 said, oh, he said, 64%, I'm not going to worry about it yet. No, no, no. When you're down about a half value of your options, a little more than half, you got to look at it and see, okay, what's going on? What's happening here? Why did it go down? Is there any chance of it coming back up on its own organically? How much time do I have left? What's the news coming up? What is the news? Oftentimes when there's been a real strong move to the downside, you'll see a fairly quick reversal back to the upside. And sometimes it takes patience to hold it out. We saw this, I think it was on Monday or Tuesday, maybe it was Tuesday. The market tanked and then it came right back up. And I think it was Tuesday, maybe Wednesday. It came back right back up. So sometimes you have to be patient, but you have to take a look at it at that point. That doesn't mean you're going to dump it. Okay, I never said to dump it when it's hit 65% loss. I just said you have to look at it and assess it. You might want to repair it. Many times when it's come down a lot and I go in and I watch for repair and I go and repair it. In other words, I'm buying more to average my cost down, and then I walk away making out like a bandit because it goes right back up to where it started. And now I brought my average cost right down, and that gap is just it's pure profit. So, and that's how it is. Next question is, how do you get 6%? Simply multiply your buy price by 1.06. If you're looking for 8%, you multiply it by 1.08. Basic math. And the next question here, are we looking for a lower price or do we calculate the price same as the call? I'm not really sure what that question is. I'm guessing that this person is looking to buy puts. So if you think the market is going up, you would buy calls. If you think the market is going down, you buy puts. You do not sell anything. Never sell first. Always buy first, then sell. Yes, you can buy first. Or sorry, sell first. You can sell first. Then you'll find yourself in a naked position, perhaps. And that could be in a real precarious spot. Aaron, I got to tell you the story about Amber. I told you the story, Aaron. I know
Yeah.
a lot of people
Yeah.
know. Um, I can't help but think about Amber even now. Hardly a week goes by. I don't think of her and wonder how's she doing? What is she? Well, I don't think she's trading anymore. But so long time ago, here's a lady. She comes from the health sciences. She was a massage therapist, 5 kids, deadbeat ex-husband, whatever. She wanted to make some money on the market. She took the course. She learned how to trade. She was very good, really good natured girl. I really thought the world of her. And she was very good. She was in and out of SPY. She made money, made money. She loved it. She wanted to get rid of this massage therapy business and just do this. She loved it, and she was doing very well. Then I remember the one time she said to me, "You, I thought I got a new strategy I learned from a friend of mine." So, oh my gosh, what is it, Aaron? What is it, Amber? She says, "I'm selling naked puts on FFIV." So FFIV, it's a tech company. I said, Amber, and I showed her. I want you to stop doing that. But I'm making money. Amber, you're making money now. But sooner or later, FFIV is going to go down. It's going to go down, which and you're going to get a margin call. And that means they're going to tell you how much money you need to shore up your account with, or they're going to, cancel your account. But I'm making money. I said, Amber, I forbid you to do I don't know how much more to tell you. You're going to lose. Ultimately, you're going to lose. Anyway, she didn't listen to me. She didn't listen to me. Then one day she, contacted me all in tears. I called her back and all in tears. Oh my gosh, what's going on? I got the margin call you told me. I told you. It's not a joke. It's not a joke, Amber. Oh, I keep calling her Aaron. I'm talking to Aaron. I said to her, what do they want? And I think she said $45,000. And she said, well, I don't have that money. I said, well, then they're going to liquidate your account. You're done. And that's exactly what happened. And such a sad, sad story because she could have been the poster child for this and this whole thing. And yet, she got greedy and she kept going on looking for something else, looking for another strategy when just day trading SPY options was going extremely well for her. And she'd have been on easy street now, and she just stayed the course, stayed the course. But that's what happened when she sold to open. sold to open. I told it, never sell to open. Always buy to open, sell to close. That way, the only thing you can lose is how much you have in the trade. You see, if you sell to open, you could actually have, a lot more at risk than than what you put into the trade. Anyway, beat that one to death. And I think we're done with that one. So that was that. All right, we're back to some more questions here. Going to wrap it up soon. 9:30. Oh my gosh, Aaron, what are the questions we have here that we should address?
Sure. Hold on one quick second. For those of you that are waiting for the beta recording, I'll be sending out shortly. I've just been traveling as well. So the free beta group that we have on Fridays. Um, did you talk about what you mean by a repair? That's
Okay,
that
so that's a strategy I like to use where so if the stock is gone, so what I do okay, so here's how I do it for myself. Okay. If you want to follow this, you can. This is something I do myself. So I come from the insurance industry, all right? I used to be an internal auditor. And so let's say there was a claim on a car, a fender bender. I'm going back a long time when it cost maybe $5,000 to repair, $6,000 to repair a small dent in the fender. I don't know what they charge now. It could be anything. But let's say the appraiser sees it's a $5 claim. Well, we might set up a liability, a reserve. It was a reserve of say $10,000. And what this is a cushion so that, okay, the estimate is $5,000, but maybe there's some other things in behind the fender that also got damaged, maybe some sensors or some wires got ripped or something, and the cost is now $7,000, not five. Well, in that reserve, we have that liability covered in that reserve. So okay, fine. The cost to repair was 7,000. We issued the check for the 7,000. We reverse all that out and take the liability off as well. But we had that liability in there in case it was going to go past the estimate. Okay. So I take that same concept in with this. So when I open a trade, let's say I buy, let's say 10 contracts for, I don't know, $1,500. All right. It could be whatever. But in my mind, I am prepared to spend $10,000 on this trade. So if I bought my initial purchase for $1,500, that leaves me with what? $8,500 with which I can go in and buy more contracts with to bring my average cost right down, like right down, really low. All right. If I expect the stock to go back up. Now, so my first repair might just be the same number of contracts to just cut my cost in half. And if it still bounces around, doesn't go up, but then it starts pushing back up, then I might go with the rest of the 7,000. Okay, here we go. We're all in. I've got $10,000 in this trade. And if it goes up, and by this time, my average cost is so low that if it does return to normal, let me see if I can just go back to something here. As an example, let me go back here just to show you this one day that I'm kind of referring to. This was actually where is it? Oh boy, look at this. This is what happens when you go backwards in time. Okay, here we go. Look at this day right here. Can you see my cursor at all? Aaron, I don't know if you see my cursor.
Yes.
Okay. This was Tuesday, last Tuesday. So the market went right down. The market went right down here. I don't know if I could even expand on this or not. I don't know if I can. I'm sure there's a way. I don't want to figure it out now because I don't know. Let's say the market went right down. I was in calls, and I see it bouncing up here. There's probably a point in here. If I was in this, there would have been a point in here. I say, wait a second here. This thing's going to pop back up at something because usually, usually when the stock goes, I'm going to see if I can do this. Hang on a second. Maybe I could bear with me for a second here. Drawing tools. Maybe I could do this. I find that when the stock goes down a lot, a lot like that, very steeply. Hang on, hang on. I want to do this a little bit so it's not so. Okay, let's do it this way. So I find that when the stock goes down very steeply like this, that it will oftentimes, more often than not, reverse just as quickly. Now, it might not happen right away, it might happen later. But in this case here, it happened the same day. Now imagine if you saw the opportunity to buy more calls in here, right? and if your average cost, and I'm going to change the color now so I can show you. So if your average cost here, you bought calls, your average cost is up here, that you now brought your average cost down to here by buying more contracts. Well, all of this here is now going to be profit, right? This is all going to be a huge profit for you if this happens. Now, moving along, the next day we had another major drop. You say, oh, here we go again. Look at this. So I got to see, why did it go down? What happened here? Well, CPI numbers that came down. It was a news item. Now I found that the market has a short-term memory for news, a long-term memory for support and resistance. And if we go back here, and if Aaron goes back into his deep dive analysis, I think you'll find there's some pretty strong support around this 514 level. All right. We dipped down a little bit to 513, maybe 513, 514, but it bounced around here, so the market was not ready yet to come back up. But look what happened the next day. Shot back up again. Now imagine if over here yet on this Wednesday, this was not yet ready for a repair probably, but over here, I think when you saw this coming up like this and somewhere in here, and of course our setup has to present itself. But when you see the setup present itself here, imagine if you entered a repair here, all of this would have been a profit right up in here. This would have all been a nice, nice profit for you right up in here. All of this in here, if that makes any sense. So I don't know what's going to happen tomorrow now, because again, we had this massive downstroke, and if we had this big, big downstroke right now, depending on what happens, overnight trading and technicals and everything else, I would not be surprised to see a recovery coming back up at some point. Maybe not tomorrow, maybe it'll be later in the week. And you know why I say that? Because we have earnings coming out. Now, as a rule, if the banks are going to have good earnings, and we got Netflix coming up here in a couple days, and some of these other earnings, if these earnings come in pretty good, I wouldn't be surprised if we see 519, 520, maybe even higher. I don't know, Aaron, what is your long term say on that, or do you even have that up yet? So I don't know.
Oh yeah, no. I think I mentioned what my long term was. It's kind of a slow, steady decline at the moment. 509.50, I think is going to be a pretty big place. That's going to have in that zone. Once we get down there, it's going to be a pretty big place of kind of a line in the sand if we're going to break it or continue. If it breaks that, it's going to go to 502, but. We've had 2 straight weeks of pretty much falling down in general. So if we have another one, that would be a little bit surprising. I think we could possibly have a doji candle this week. So that would be either indecision, or we could continue dropping based off of what's happening in Iran and Israel and whatnot. So I'm not really sure at the moment. You're usually more positive than me in general. But as far as news and forecasts and earnings and things like that. But I'm not really sure, to be honest. So we'll see what price is doing. I know what my pitchfork says, and the pitchfork doesn't lie. Pitchfork is saying that if we break, recent lows, it could continue dropping about another $8. So we have to look at the technicals, and that's what we provide in the trading room. Deep dive, deeper than Michael Phelps analysis on price action and what the market's going to be doing.
So Aaron and I can have diverging opinions on this stuff. Doesn't mean one's right, the other's wrong. And Aaron always said, if it breaks support, don't ignore that word, if. I think if it catches that support, bounces around, might get this dead cat bounce. Dead cats don't bounce very well. It goes up, finds a little resistance, comes back down, double bottoms, catches that support, starts pushing up. As it goes back up, what happens? Buyers say, oh, this is a pretty good price. I think I'll buy. And then when buyers start pushing back up, other buyers come back in because they say, oh, somebody knows something. I better buy because the market's going up, and they start pushing it up. So Aaron thinks it's going to go down. I think it might go up. It's all going to be dependent on news because news drives the markets and the technicals. And this is what we look at in the trading room. Now, I've got a question here from Janice. She's interested in joining the trading room, but she's going to be gone for a couple of weeks. Is it possible to join when I return? Absolutely, Janet. It's not like it's a class. When does next class begin? You can join it at any time. If you want to join in 2 weeks, that's fine. 3 weeks, next week, tomorrow. Get in there. Don't join at 9 o'clock the day of and expect to get in. If you do, you lucked out. But we get very busy at 9 o'clock, and we can't send out those emails at that time. Plus, you have to go through customer service, so not sure what time they get in work. So we got an email, big long email here from Jim, and I'm going to get over his questions too because I know that he's dying for some answers. I told him I'll address his questions in the Sunday night session. So his first question, the prior 2023 January to June data is from a trending market and a year old. Does the data still apply to today's market? So that probably refers to either the pick or the signal. Those are the data would hold through all the way to the end of the year, all the way to now. That data is consistent, and we consistently are pulling in 90, 93, 94% success rates on those strategies, which is actually very, very good in this business. All right. So I think we're around the 93, 94. I'm not sure what it is now. We don't track it. We've done so much testing that we don't have to keep going back. And what we do is we look at these short-term trends and stuff. So whether there's an uptrending long-term market, we're not into this for long term. Our long term is what? A day? A day? That's the end of the day is long term for us. So we're looking to see where's the market going to go today. That's kind of what we're looking for. So second question, one of your plays was a 58% gain. How was that possible? Okay, so that was, I remember that one. That was actually a pick of the day. I believe it was a pick of the day. Yes, it was a pick of the day. And we ended up holding that overnight. And the next day it opened up higher. And we actually closed that trade the next day pretty well at open. I think maybe about 9:30 and 10 seconds or something. By the way, that went up quite a bit even after that. So that's how we got the 58% on that. But I think, Aaron, if we remember correctly, we may have brought that down to a 6% just to keep it consistent. I don't know what we did with that, but I know we're very conservative with what we report. But yeah, every now and then you're going to really get some lucky breaks on this when that happens. And the reason we held that overnight was because we were confident that the next day the market was going to go up. I believe that could have been the day when NVIDIA was reporting their earnings, and we felt that with the whole AI and the chip maker and all the chatter around NVIDIA that was going to be a very good day, and it turned out it was. So, next question of 20, excuse me, of 20 trading days per month from your 2023 data, 6 trades are the 6% winners within 30 minutes. 6 trades are winners, but hold time the majority of the day. Hold time is the majority of the day. What is the expectation on average of remaining 8 trades for a typical month? I don't have statistics on exactly what time they closed, what time, how long we held them, whatever. These trades that we give you, these are high probability trades. Some might close within like a couple of minutes of purchase. Some might have to go on the next day. It's just whatever it is, okay? And some we don't know where the market's going to go any more than anybody knows. There's only a handful of people I think in the world that know where the market's going to go. People like Jerome Powell, Fed Chair Powell, and love him or hate him, he moves the markets. And no, and Aaron, I should tell everybody that chatter about Powell being a friend of mine, and he calls me. Just so you know, that's actually a joke. Okay.
Yeah, but you do know Tom Sosnoff, so that shouldn't
I
be
do know Tom Sauce. I've got Tom on my speed. I can call him right now and he'll talk to me. I know Tom Sauce not very well. So yes, but Jerome, no, that was a joke. I don't want you to think that, oh, I got some inside track. I don't. I don't have any inside track. Neither does Aaron. And if we did, we probably wouldn't be telling you. So no, I don't think we don't.
I did serve Janet Yellen's dinner one night though.
Yes, you did. Yes, tell us that story. That's an
When I was a
interesting
bar when I
story.
was a bartender and a server. I did a private event for them, and I think it was Ben Bernanke, Janet Yellen, and a few other people at a private home. When I used to be a dashing young waiter in the catering industry, and they would put me in the front of houses and things like that. I served it. I probably shouldn't say too much about this because people are going to start listening into our conversations here at DayTradeSPY. But yes, I've served some well-known people.
What did Janet Yellen have? Do you remember what she had for dinner? Did she?
Uh, I think it was well, you know, these pre-planned dinners, they're always you know, they give you this really nice salad, usually with some type of protein on it.
Yeah,
Or keep it light, and then they give you the main course. It's usually a protein, a starch, and a vegetable. So it's very traditional.
yeah.
So it's you know usually like some type of beef, steak, and then uh, potatoes, and then you know some type of concoction of Brussels sprouts or carrots or whatnot, and then this a real nice dessert with coffee. Usually that's what banquet service is, at least in the DC area. Very traditional.
Yeah.
I don't remember exactly. You know, that's a long time ago. That's before I started learning about pitchworks. So um, it's a long time ago.
All right, next question, real quick. I just want to kind of get through this. There's only a couple questions here. He says, on a day that goes 100 points to the downside, when a call is in play, when will you rebuy again another call? And that goes into the whole repair trading strategy. Again, we actually have a workshop about repairing trades gone bad. You might want to go out and for what, a couple $100 or something. It's really well worth it. And next, one more question. He says, how and why would it be justified to stay in a trade for 6% reward that has gone 10, 30, 60% against us? And again, these are long-term trades when we get into these things. So, I don't want to just jump out of a trade immediately just because it's going against me for the moment. If I have lots of time, in which case the option will come back, the stock will probably bounce back on its own. All right. I'm new to and don't know how to read the daily trades sent to my email. Norman, there is a instructions on how to read those emails. It's the sample email. When you get the pick of the day, if that's what you're referring to, the pick is the yellow pick. Look for your option as to how. So to read the option, you've got your SPY, the stock code, then the expiration date starting with the year, month, day, and then C for calls, P for puts, and then the strike price. Look for that on your trading platform. Click the button you want to buy to open at 9:30. I think we're probably going to finish this up here. You got so many questions, so many interested people. Love you guys all, but you know what? We can stay here all night. And I was just kidding about that, having to check out for a few minutes at midnight. We don't want to do that. We don't want to keep any longer than that. Okay. Aaron, I don't know. Any other questions?
I was gonna say, I got somebody that told me that tonight would be a good night to watch a movie. I believe it was let me see what it was. Doctor Strangelove or How I Learned to Stop Worrying and Love the Bomb. I don't know. Have you ever seen that movie?
No, no.
Okay. I'll check it out.
I'm actually watching Sully right now. And I've seen it before, but I remember seeing, yeah, I remember I was a little pissed off at the NTSB, National Transport Safety Board. They're grilling him. It's okay. This has got nothing to do with trading. So Captain Sully, he's the one that took that plane down and landed it on the Hudson River. The guy was a hero. He saved all those people. And the NTSB apparently said, well, our engineers, our data shows that you still had a little idle still left in the one engine, and you could have made it to Teterboro or to LaGuardia or something a few years ago. And they're questioning him, like as if, like, who would know better? Who would know better? Some engineer, computer model who doesn't know what. So the plane took off. It hit these birds, geese. It hit these Canada geese. They went into the engine, choked the engine. Engine's crapped out. No, there's no thrust. No thrust. Even if the engine's idling, there's no thrust. Okay. He had no choice. It was either that or crash into somewhere downtown Manhattan. That was the choice. He put it down onto the Hudson. I think it was in January sometime a few years ago. Saved everybody. A couple minor injuries. Unbelievable miracle. And he's just doing his job, and they were questioning him. Anyway, I'm all wound up about that. Not don't mean to be. Aaron, we gotta go. I think I punished these people enough. And okay, here's an interesting question. All right, please address the huge price increase for the pick of the day to $39.99. Okay, so we should talk about this. So on the website, this is very important, folks. If you are looking for any of our products on the website, you're going to be given a price. Here's what you do. You email customer service at DayTradeSPY and say, I am interested in the pick of the day. It says $39.99. Do you have any specials? And they're going to come back and say, yes, we have a special. And they're going to give you the special price. Okay. I'm not going to get into the details to why all that is, but that's the way it has to be. So contact customer service at DayTradeSPY. Tell them what you're interested in is, and they will give you the best price available, and you're going to be fine. Okay, you're going to be fine. Those prices, I think they're going to give you are the prices I quoted you in this presentation. So, all right. That I didn't want to keep this as long as it is, but we're going to call it a night. Thank you all for joining us. It's been fun, but we're done, and I have to move this forward. I believe the subscription page is coming up at the end of the session, so stick around. Thank you, Aaron. Been fun. We'll see you tomorrow in the trading room.
Thank you, everybody. Yep, take care.
And the sun, be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you